Hey guys, how you doing? It's Brad with ATREpodcast.com, all things real estate. I'm really excited to introduce my next guest, John Fortes. Now, John, along with his wife, Jen, and their two beautiful children, boy and a girl, a boxer and two cats, reside just outside of Boston in the South Shore of Massachusetts. John Fortes is also known as the Passive Investor Consultant. John founded the Fortes Company, which partners with working professionals that are seeking to invest in a diversified commercial multifamily fund because they don't have any desire to own their own real estate and to fully own and operate it. So by leveraging John's experience, he has helped families invest in over $70 million in multifamily investments. That's allowed them to secure financial security, preserve and grow their wealth, as well as compound their investments and achieve their financial independence. Now, John is also the host of the Passive Investor Show. It's a podcast that showcases the value of investing in real estate funds to provide a truly hands-off experience. Now, this show has become one of the hottest real estate podcasts on iTunes for working professionals looking for a hands-off approach to investing in a real estate syndication and funds. Now, although John loves spending time with his family and he's a workaholic, another fun fact about John is that he also enjoys refereeing at high-level basketball games. Look at you, Ref John. Wow, it's great to have you.
Yeah, man, it's great to be here, man. Thank you for having me, man.
Well, I'm excited to have you, and let's just kind of dive into this. And how did you start investing? How'd you get into it?
Well, remember how you just noted that I'm a high-level basketball referee?
Yeah.
So prior to doing that, I was a IT consultant. So a full-time IT consultant, and I needed flexibility for my schedule to go ahead and start taking games at a lower level to advance my career. So what happened was I needed to replace that income with something that I could understand and create some cash flow. Multifamily investing, or simply real estate investing, essentially became that vehicle for me, where I've noted this on numerous podcasts before that I didn't really understand the stock market game because there was too many middlemen involved for me to understand how they were getting paid on a level for me to get paid on that level. So real estate, by purchasing something where me and my wife purchased a foreclosed home that we live in till this day.
Excellent.
And as we were renovated, we saw the forced appreciation. So we started to move our, stock market money into real estate. So we purchased one single family home and then quickly scaled because when I dive in, I learn quick. And the one thing that you hear is if you start with single family, you eventually move to multifamily.
Right.
So I wanted to skip the residential multifamily and the residential side altogether.
Right.
So I invested in myself, invested in some education, and eventually started learning about commercial real estate, the nuances, the challenges, and the obstacles, the barriers to entries, and how to get into it. So basically, to answer your question, that's my story in a nutshell. But if I knew about passive
Hold on,
investing,
let me ask you a question.
go ahead.
So that's kind of a segue. So let me ask you. You bought a house, okay? Then you figured out how to leverage your equity in your home to buy not another residential home, which a lot of people do, but to buy a multifamily home. Now, I understand that you had never bought a home before, bought a home, redid it, saw what to do, figured out how to leverage your money, which is brilliant. And instead of buying another home, so all your eggs aren't in one basket, you put it into another basket, which would be multi-residential apartment building. Did you have any unexpected pitfalls with your first investment? So I understand that you wanted to do passive income, and we'll go into a little bit about that. But did you have any unexpected pitfalls that you just kind of didn't, you'd never done it before, you weren't aware that it was going to happen?
No, Brad. I mean, it's super easy, right?
It was really easy.
No. So the first one, I knew I wanted to do the BRRRR strategy was buy, rehab, rent, refinance, repeat, right? So
it's a great strategy.
I realized that for my first one, my risk tolerance wasn't that high. So I bought a turnkey
Oh,
and
smart.
it's cash flowing to this day. We're doing fine. We got a tenant in it. It's great, whatever. The second one was more on that Burr level. And my second real estate investment uh, is essentially the 62 unit that me and my partners first partnered on. On the first multifamily project I've ever done, it is literally what someone would purchase as a house flipper on a,
Yeah.
on a lower level. Don't ask me why my risk tolerance isn't as high on that level when I'm literally sharing in the risk with a bunch of other people
Right.
that are looking to succeed. But as a passive investor, would I invest in something like this? Not unless the operator was experienced.
So let's ask you, John, what is passive investing? So you've mentioned it, and I know that your show is called Passive Investing, and I have listened to it. But for my listeners out there who are going to become your listeners as well, because you should definitely listen to Passive Investing with John Fortes. Uh, what what is passive investing? Explain that to my listeners.
Passive investor. So, Brad, you're a working professional, everyday professional. You're contributing to this world. You're doing what you are truly great at, and you possibly love it. You're not looking to replace your salary. You're looking to solve some problems for yourself. Um, Maybe you are trying to create your replace your salary, but here it is in a nutshell. You find an investment vehicle that you like. Let's, in this case, it's real estate. You're a working professional. You don't have the time to go ahead and become the landlord on your own assets on maybe even a smaller level. So you become a passive investor on these commercial high-end deals that are accessible through private equity firms,
Right.
and you invest in a minimum contribution. Maybe it's 25,000, maybe it's 50,000 a pop. So let's say that you have 500,000 and you was going to go buy one asset. Why not contribute that in $100,000 investments on a passive level, sharing the risk as you start to learn the business, you sharing the risk as a pool of investors in a syndication,
Right.
in a syndication model where there's a general partnership and a limited partnership. The passive investors are the limited partners, and the general partners are the operators who have experience underneath their belt to
More
fully
risk.
operate and produce the returns that they're forecasting for this
Right.
typical asset. There's a few things you want to watch out for. You want to make sure it's in a strong market. You want to make sure the operators, obviously the operators are the number one part of it, because no one's going to watch your money as close as you are.
Right.
So you want to make sure that the operators are experienced. So private equity firms that specialize in these opportunities are similar, are pretty much the go-to on that. So there's a few of them out there. You've probably heard the big ones like Blackstone,
Of
who
course.
is now moving into more hedge fund type assets
Mhm.
of purchasing big, like businesses outside of real estate. So with that said, you raise money from private investors on a passive investment where they are too busy and they just want to produce maybe some tax benefits.
Mhm.
Speak to your accountant about that, how real estate can do it. You can still achieve those as similar in a syndication as you would if you personally purchased it yourself. Along with that too, there's a lot of things that you can do with the commercial multifamily asset that you can't do with a residential home. For instance, maybe, I mean, I'm not saying you can't, but you can, but it's a lot more difficult. It has to meet a certain threshold. There's a cost segregation component to it where the minute we purchase assets, we run a cost segregation study, which accelerates the depreciation of the asset. And
Okay.
now we go ahead and capture that through tax savings. So that's how you save with tax breaks. And a lot of people are looking for that. High net worth are looking for that.
So
Eh,
so John, let me ask you for my
yeah,
listeners.
sure.
In a nutshell, really what passive investing is if I've got anywhere from 25,000 up to, whatever, 500,000, I could take my 500,000 and say, "Hey, John, I'd like to actually be in your next five investments. Here's 100,000 for each one." Or I can take a certain amount and give you whatever we decide on, and I will make passive income at a certain rate. You'll say to me, hey, Brad, your rate of return, we expect it to be 16.9%, or we expect it to be 7%. Um, are you generally more on the conservative side?
Absolutely, everything is conservatively underwritten,
That's great.
including our exits. And you are absolutely right in explaining that. We usually do it in a format of that model that you explained. We
Okay.
wouldn't take all of your capital up front. We don't do that. We do it on a deal by deal basis or a fund basis. So
Excellent.
if the fund that we create a fund that'll be diversified where, for instance, if we create, this is my example I like to use, if we created a $5 million fund
Right.
and you had $500,000 and you want to contribute 400,000 to that fund, we take that fund and we diversify it through many assets. Now, the other one-off situation where you also explained is I offer an opportunity, you reserve your spot,
Right.
you go through the process, we send you the paperwork, we work with all legal attorneys, have it SEC compliant, make sure we're registered with the SEC with each offering,
Right.
and then you get the documents as well since you're investing as a limited partner because we are essentially selling a security. Now that's how you invest in that, and then the wiring instructions roll out, and then you wire it before the deadline meets, where we go ahead and close the asset. Then we start operating it and go off with our 5, 7, 8 year plan.
Which is great. So let me ask you, John, let's back up a second. I want you to think way back when you were just a young pup and you thought, wow, I wish I knew then, right? What I know now. So if you were Marty from Back to the Future, what would old Marty go back and tell young Marty to make sure they do and to make sure that they stay away from? What would you do?
Invest in real estate sooner. I didn't do it till I got into my mid 30s. So well, start sooner. And then when you start, you always say you wish you started sooner. Similar
Right.
with
Of
basketball
course.
refereeing. When I started, I wish I started sooner.
Yeah.
So I would tell myself this: understand that there's 5 ways you get paid in real estate. There's appreciation, historically, 6 year average,
Yep.
cash flow,
Yep.
rent income minus all expenses, residual income, loan pay down. Tenants essentially pay the monthly finance debt. Tax benefits, I just explained that a little bit. Inflation hedge. Inflation eats the value of your power of your savings. So while you're investing it, and at the same time, it also eats away at the pile of your debt on the investment. So debt today is cheaper than debt tomorrow because inflation eats away at it.
Very true.
Factor in the 2% inflation bump every year. That's how much it's that basically the loan is worth less today than tomorrow.
That's right. Good for you. Look at you. You got it all figured out.
Nah, I learned this through a lot of people that helped me along my way, man. I wouldn't be anywhere without them.
And I say the exact same thing as you say. I really wish I would have invested and held the properties a lot sooner. I wish I would have not sold several of the properties that I've owned. So I do.
I mean,
Agree.
that's the nature of the game, though, right? So you could
Passive
say coulda,
income.
shoulda, woulda, but at the same time,
You learn your
you
lessons.
know, it's funny. Like I think you come across this a lot when people see house prices today, and they're like, "Oh, I should have bought it like 5 months ago. I
Yeah.
should have bought it a year ago." It's cheaper today, anyways.
I tell people, John, all the time, they'll go, I can't buy now. It's too expensive. And I go, well, you said the same thing to me a year ago. And a year ago, it was $100,000 cheaper. You are the investor that is never going to invest or never going to buy and actually even own a home because you're so scared of making the wrong move. But the truth is if you buy something and you hold on to it through a cycle, you're going to do just fine. You're going to be brilliant because the only time you really truly lose in investing in property or in the stock market is if you buy and then have to sell it when it's worth less. And if you don't have to sell it when it's worth less and you have the ability to hold on to it and run through a cycle, you'll be just fine.
Absolutely. And just to piggyback off that, there's 3 fundamentals we practice where we buy for cash flow. We put great debt on it,
Okay.
but also we have adequate reserves. Those are the three principles. So buy for cash flow, have adequate reserves, and leverage cheap debt.
That's great. John, tell my listeners a little bit about your podcast and where they can find it. And are they going to be able to hear more about passive investing on it?
Absolutely. What we do is we first of all, Brad, thank you for having me. Everybody that's listening, please do me a favor. Go and rate and review this podcast right now. He's doing an awesome service to the real estate culture in general. So I appreciate what you're doing, brother.
Thank you so much. I'm learning from you, buddy. You're the best.
Oh man, so man, we're learning from each other. So where you can find me, you can either find me at johnfortes.com, JOHNFORTES.com. PassiveInvestorShow.com is the podcast. Or if you're looking for something to track your real estate investments, I created a investment tracker. So you could use this with your personal investments if you invested passively. Just how do you track it, and how do you track different aspects of the components, so you can invest in more of that type of asset because it's producing so well.
Yeah.
You can go to projectedreturns.com. Yeah, that's it. I mean, other than that, man, I'm all over social media and you can find me pretty much anywhere.
Yeah. Or you might be reffing a game, right?
Hey man, you might see me. You might see me.
Hey, John, I have to say thank you so much for being here today. To all my listeners, I am also now, you can go to All Things Real Estate on YouTube and watch this video. So if you're listening live or you're listening on Apple iTunes or Spotify or any of the major podcasts, you can also go to YouTube, type in All Things Real Estate, look for John Fortes on my show and watch it live. And if you're interested in being coaching, if you're interested in me coaching you at all, go to my website, allthingsrealestate.com or ATRE podcast. Actually, it's atrepodcast.com. And just look for my 5 secrets on how to become successful in real estate right now. 5 secrets on how to be successful in real estate right now. All right. John, thanks so much for coming. And you've been a wonderful guest, and everyone just listen to John. He's amazing.